Hello and welcome to the latest episode of Talking Ball with us, Signal Centre. I'm Joe, joined by Jamie and Steve. It's the 19th of April. Good morning, gents. Hope you had a lovely long weekend.
Yeah, very nice.
Morning, yeah, it was good, thank you. Had a good one.
Nice, good to hear. So back into the thick of things today. Let's get stuck into the latest headlines and what's moving markets before then having a look at things from a technical perspective and also lining up some potential trade ideas for the day ahead. So first up, latest headlines, yield spreads boost the dollar. We saw the dollar move to um, higher levels, 2-year highs yesterday, I believe that was a little bit of a retreat so far today. We've also seen yields continue to move higher with the US 10-year around 2.85% on Monday, its highest level since December 2018. That is before a slight correction. We've had some verbal intervention, the verbal intervention that we've seen from the Japanese Finance Minister Suzuki has failed to support the yen. That continues to look exceptionally weak, and we'll come on to some of the charts on that shortly. Overall, remained under heavy and sustained selling pressure and crashed to a 20-year low against the dollar. In terms of what's going on with the ECB, they have resisted a hawkish shift. The ECB made no changes to monetary policy at the April meeting, with the main refi rate held at 0%, which was in line with the consensus forecast. As far as the economy is concerned, President Lagarde stated that downside risks to the economy have increased substantially while inflation risks were higher. The rhetoric failed to support the euro, with markets having already priced in more aggressive tightening. We did see some strong numbers out from New York on the business survey side of things. The New York Empire Manufacturing Survey strengthened sharply to 24.6 for April from a previous minus 11.8, which is well above the forecasts of a rating of 1. We've also seen more attacks going on with Russia and Ukraine. Unease over the situation increased after a Russian missile attack on Lviv. There was also strong expectations over a heavy battle in the Donbass over the next few weeks, with Ukraine President Zelensky stating that the Russian advance had started. The fears continue to underpin energy prices, with the global markets and the late winter storm also triggering a surge in the US natural gas prices. And finally, the retail funds continue to sell sterling. The latest CFTC data recorded a further increase in short non-commercial sterling positions, with over 53,000 contracts in the latest week, below the 42,000 previously. So let's get stuck into some charts. Steve, would you mind kicking us off today?
Yeah, I'll just share my screen. Just mentioning, you mentioned the 10-year yield, Joe. We drew this formation a few weeks ago. You know how we love to see head and shoulders formation. This is an inverse head and shoulders formation, and projects a measured move target of, wait for it, 5.5% in 10-year yields. Now, we brought this up on the chart after we had this retest of the neckline. So it was only maybe a month or so ago. And in that month, we've seen like a pretty decent move, even if we take it like we mentioned it 5 weeks ago. We've seen this 887 points move in over 6 weeks. I mean, it's pretty a pretty decent chunk, but further to go. I mean, the real sort of like level of resistance we see coming in around about the 3.25%, which was the highs back in 2018. But we've got a long way to go to see them, the measured move target. That'll take us right back to well, 20 years, probably around about when the dollar yen was at these sort of levels. So yeah, that's just, I just wanted to highlight the sort of like 10-year yield looking still very bullish. Further upside seen there with this dollar strength, no denying it. Other markets to look at, I wanted to look at on. I like to sort of like take a look at the weekly chart at the start of a week. I know it's a Tuesday. We've had a Monday bank holiday here in the UK. But we've had a couple of decent weeks on gold. Price action moved up towards just below $2,000 installed there, and we've already had a retest of that level. Let me see, retest of that level this week, where we got up to 1998, and this is we're forming a bullish candle on the 4-hour chart currently. So support coming in around about the mid 1970s, 1974 here, and below that we'd have further support around about 1960. So this trend higher looks to be continuing. We are being aware of this potential head and shoulders formation. I might get the dogs barking in a minute. Mr. Posty's arrived. But yeah, I still remain slightly negative on this, with selling in front of this $2,000 level as quite key. A break of there, though, could easily target the all-time highs around about 2070 to 75. 70 was the high we reached in March this year. 75 was the previous and the all-time high. Crude oil quickly. This seems to have calmed a little bit, although last week we can see this nice reversal formation, a bullish outside candle on the weekly chart. So further upside seen, support probably coming in around about the well, just below current levels, around about 105.25. On the short-term charts, we can get a little bit more of a picture. The daily chart is threatening maybe a correction, saying we have to break above 108 to stave off this negative formation, which is looking likely at the moment. 108 on the upside, a break of there, and we'll target. Oh, that's only an hourly chart. That's a short-term chart. I thought I had a daily chart up there. What's that doing in the wrong place? Let me have a look at the daily chart. So short-term chart looking a little bit toppy, and I suppose we can see it. There was a doji candle formed yesterday. We got up to 50% retracement of Fibonacci retracement of this move down, and that was just below the 109 level, trading around 106.50. So support really coming in at 105.30. Break below there could open up the downside, as the short-term chart is showing in here. Potential head and shoulders formation. Very quickly, I'll just finish it off with Bitcoin. That's had a little bit of a recovery. Let's look at the daily chart on here. Yesterday's bullish outside candle saw us get down to a low of 38,500 before buyers came in, but we still need to break back above the 41,600 level to sort of like see if we can push further on the upside, but it's failing to do that at the moment, with selling coming in the last few hours. We can see a little bit of a toppy move here with a shooting star candle forming on the 1 o'clock candle this morning. So could be potential to fade it a little bit on a short-term basis. That's about it, my side.
Nice, thanks, Steve. Okay, let's have a look at FX and indices then. So dollar index first up continues to trade outside of this bullish channel on the upside. We saw a very decent break higher. So yesterday, some strong price action to start the week. Obviously, it was a bank holiday in most European countries, but dollar index was surging to new highs. A little bit of a stalling so far in price, down by 0.06%. As we approach the next level of resistance that we have on the charts, which is at 101.41, which is an 88.6% Fibonacci retracement level of this entire move. If we take that out, then we'll be looking for a retest of these pandemic highs that we saw in the dollar index up at 102.98. So obviously that's having an impact everywhere else. And as we can see here, euro dollar making new lows. Not quite taking out the lows actually that we posted on the 14th of April, which was last Thursday, but we're getting very close. A little bit of a bounce today, but overall it still looks pretty weak, and I think we can expect to see lower prices towards the next major support that we have on the chart at 106.36. If we take a look at cable, small bounce on that today, seems to be holding around support here at 130.00. Nice big round number. but overall still looks obviously very bearish. We may see a little bit of consolidation here, but ultimately expecting a move to the downside in line with the dominant trend towards our next support on the downside, which is the 50% Fibonacci retracement at 128.46. But really the big story in FX today is with the Japanese yen, because it continues to weaken against all currencies. This is the Aussie versus the Japanese yen, making new highs, as you can see here, up at 94.50-ish. I have to go some way back on the charts to see when it was last at that level. And we're going back here to June 2015. So, a significant amount of time previously since we've seen that number. If we look at euro versus yen, similar situation, making new highs, big move to the upside following the break of this resistance here at 134.12. No signs of that slowing down. But I think the key metric or key number that obviously everybody's watching, particularly the finance ministers in Japan, is dollar yen. Now that broke through this resistance here at 116.35 and has not looked back at all. It's pretty much moved in a straight line to the upside. Just a little bit of correction in here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 consecutive up days in a row. We drew this on the chart ages ago when we were talking about the sort of, I guess yen was around here actually versus the US dollar, or dollar versus yen, sorry. And the central bank were talking about the 130 level being that key level for where they would potentially intervene and try and support their currency. So we've had that drawn on the chart. At the time, it looked like it was miles away, but now all of a sudden, we're rapidly approaching that level. So it looks as though at some point there may be some intervention by the central bank in Japan to try and strengthen their currency. So do be aware of that if you are chasing these yen currencies or playing them in any sort of form. There could be some central bank intervention at some point.
So you should see a big pullback if they do intervene, basically, Joe. That's the sort of like the thing behind it all, isn't it?
I guess so, yeah. I mean, I was just looking at what they would potentially do or what they've done previously. So there was a couple of articles that I looked into and what would prompt them to start trying to support the yen and start buying it. They would issue basically short-term bills, as which they've done in the past, which would help. Obviously, many challenges associated with that. And when they've done it previously, I think it was 1998. So,
oh, really?
historians
So
that
quite a
want to
while
go
ago.
back to, to that could flick back from the charts and have a look at what happened previously. But yeah, it's an interesting time, that's for sure.
Yeah.
Okay, so indices. Let's take a quick look at some of these, shall we? So this is Aussie, which continues to hold up pretty well, given that it's got a lot of influence from commodity prices. So that continues to trade in and around this level here, which is at around 75.70-ish. So around these previous highs as well, it's sort of finding some resistance, but up around these elevated levels as things stand at the moment. And it's a similar situation for the FTSE 100, actually. That continues to trade at elevated levels as well, around 76.78 being the major, or 76.87 being the major resistance level here, which was just before the pandemic broke out, actually. So if we get a break above those levels, then we may see a continuation higher. But at the moment, that is being driven primarily by the price of commodities. There's a lot of mining companies that are listed in the UK, as well as some massive oil and gas companies like BP and Shell, which have a pretty significant weighting on the overall index. If we take a look at the US markets, we've continued to see NASDAQ underperform. It's holding around support at 13,832, which is a 61.8% Fibonacci retracement level of this swing move here. So from these lows that we posted on the 15th of March to these highs that we posted on the 29th of March, which also was a 61.8% Fib level from this high here down to this low. So it seems to be respecting these Fibonacci levels quite well at the minute. We tried to make a new low yesterday below that 61.8, but the bulls fought back to defend that level. Now, what I did draw on this chart last week, and something that I don't think can be ruled out, is this being a potential inverse head and shoulders bottom pattern. Having found support here at the 61.8, it may be that we've just formed the end of the right shoulder, which could then go on higher towards this resistance at around 15,243. Highly speculative at this point, trying to gamble on these shoulders taking shape, because anything can happen. But if, from a risk reward perspective, if you were of the opinion that Head and Shoulders was forming here, if you were to buy close to what we believe is the end of the right shoulder and then hold on for a break of an inverse Head and Shoulders, potentially massive risk reward that you could get from that, but all very speculative at this stage. Finally, just going to wrap up with the S&P 500, as that's the broadest index, obviously, that we look at on the US market side of things. 500 stocks as opposed to the Dow, which is 30, or the Nasdaq, which is 100. Still looking as though it's on the back foot. We saw this mean-looking candle on the 14th of April, which engulfed all of the previous day's session. We saw a little bit of a fire back yesterday, but I imagine volumes were quite low given that Europe was off for a public holiday. Again, could be forming a similar sort of inverse Head and Shoulders pattern, but highly speculative still at this point. Overall, I think it's just going to continue to trade in a bit of a range, and price action is going to remain choppy. So that's it from me. Amy, how are we looking on a stock basis?
Thank you, Joe. Before we crack on and get into the stocks, I think we're for the first time successfully live on TradingView this morning. So for anyone that's joining us on there, welcome. Hope you enjoyed the show. We do this at 9:15 every weekday. We look at stocks. I mean, you've seen if you've watched us to this point, but if you do enjoy it, do drop a like. And yeah, if you've got anything particular you want us to look at, do drop a comment as well, because we're very flexible on what we can on what assets we can check out. But we will jump in on stocks. And last week I started the gainer loser segment properly that I've been doing, and I think our biggest gain actually was this KLDO. But it's sad today, because I think, as we discussed last week, it was getting delisted. So now it doesn't exist, and it's got this very sad looking, I'm not sure, like a ghost.
It looks like a Pac-Man ghost.
Like it does a bit, doesn't it? Yeah. Pac-Man has eaten this entire company. Very, very sad state of affairs. But I was thinking about this earlier, actually. So I guess the big buying last week would have been people covering their shorts, would it have been? I'm trying to think if there were a lot of selling going on, actually trying to make some money out of it.
Would have been some profit taking, yeah.
Yeah, because I remember when we looked at that last week, when I picked the profit, the gainers and losers, I just look at the highest percentage movers and I just pick out of that. So I guess it would have been a lot of profit taking, but certainly not a strong stock, as we can see. It's now turned to a Pac-Man ghost. That was just a bit of an update. We'll looking onto this week. We can see Casa here, which is a technology service, has shot up 82%. I think this was actually last week, so the 18th. Yeah. Yesterday. And this was, I had a little look off the back of, I think Verizon have bought into it or invest into it. I'll read this headline here. Casa Systems provide its 5G network functions to help enable Verizon's public mobile edge computing service offering. So a nice day for anyone bullish on Casa, up 82%. We'll jump into one of the biggest losers, which is this Veru, which I think is one of those biotech stocks that had a successful trial. I think it was a phase 3 or some progress in it. And obviously had this big update. We've had some profit taking. It's down 20%. So just a quick look at the biggest gainers and losers today. Before we jump into some more well-known stocks. And there's nothing really, I was having a look this morning, there's nothing really that's too crazy jumping out at me. I had a little look at Robinhood, because we're still kind of in this consolidatory channel, with the resistance level being this kind of 1550, between 15 and 1550. And the lows being this quite key 10 psychological level as well. We're clearly in this real downtrend since the IPO back in August, and I'd certainly not, well, I mean, personally, I think this has got more room to go lower, and it may be strange thinking that with how low it's already gone, but there's not a lot at the moment that excites me about this from a technical perspective, and there may be other viewpoints on the fundamentals and like the value, but purely technically, I don't love this still. I'd like to see a break of this 1550 before you get more excited about that. Quick look at Novavax, as we quite often do. But the reason I want to bring this up today was actually, I remembered a conversation I had, I think, with Joe a few months ago when we were thinking about putting an idea out for Novavax, and I was looking at it at about, I think it was 130. And I think I'd set a measured move target for this. We kind of took this channel we've been trading in I think the measured move level was, we can quickly draw it out. You take the distance of the channel and you draw it lower, like that, which is pretty much played out to the T now. But I remember saying, like, look, this got the measured move of
Did I
down
tell you
to
not to
50.
do it?
No, you didn't. Our discussion though was, I remember saying like, wow, that's like a 60, 55% move. Like, surely it can't, like that seems like such a long way away. But I guess the point I'm bringing up is like how this is only 3 months later and it's fallen 50%. So these, I mean, stocks can move really quickly, and it's just again highlighting how important it is to have some kind of risk management and not just kind of buying and holding the whole way down, because you can get in a lot of trouble. And like I said, 50% moving, we're coming up to 3 months now. So it's had a big old drop, and it's still, I mean, to me, this looks like it's still got further to head down. I mean, look out at a weekly chart, and we can quickly drop a quick fib maybe to give it some kind of target. I think we looked at this last week, broken the 78, 60. So really for me, I'm probably looking towards this kind of $50 level here, which is also a psychological level, which isn't too far away. It's only $6 away, but I think that's where the next point where buyers will come in. It was a previous resistance back in 2018 and early 2019. So I think that's the next target, but certainly room to move lower for Novavax, but an interesting kind of look on how stocks can really fall quite quickly. What other ones should we have a quick look at this morning? Nvidia is at quite a key support level. We've got, I think, earnings for a lot of these stocks this week. Not Nvidia, I think that's slightly later, but certainly keep an eye on that if you're trading or looking to trade any. But Nvidia is at this really key support level. I think we were looking to try and get a bit of a bounce, although I think it could be a temporary bounce. So I was kind of looking to target not a move back to the highs, because this isn't looking so hot at the moment as a lot of these stocks aren't. Jump in. We had a nice look at Cisco. This broke through the support. We had a look at that last week. Was there anything else? Renault was another one we actually did trade, and we just missed the profit, but I'm optimistic that will still kind of follow through and hit. We did have quite a dramatic move lower. So, yeah, we're going to keep an eye on those. But I think in future what I might do, and maybe when we start getting a few more views and a few more comments, is just for people to kind of pick a random stock that we can kind of pick and analyze live on the stream, and kind of go through our thought process on how we go about that as a three, and the kind of levels and stuff we look for, which we kind of do already. But I think picking random stocks people are interested in could be quite a nice little segment. But excuse me, we'll leave it on the stocks today. But yeah, like I said, earnings are out this week for a lot of these big companies. I think Tesla got earnings this week. Am I wrong? Yeah, it does. On the 20th, I think, according to TradingView. So be very careful trading around earnings. You can see these big percentage moves. So yeah, do be careful trading in the next couple of weeks.
I was just going to have a look at our economic calendar, corporate calendar, actually, just to see if we can. So this is Acuity, our company that owns Signal Center, basically. So we have a really neat corporate calendar which describes all the latest events. So in blue we've got the earnings, dividends, calls, webcasts, any stock splits or IPOs that are coming out as well. So today this is what we've got due out. So just, you know, big names in there from what I can see. We've got Halliburton, Hasbro, Johnson & Johnson, Lockheed Martin, just to name a few. And what we do have as well with these with this calendar is what's happened previously with regards to earnings surprises and how good the forecasts have been as well. As we can see here with Lockheed Martin, which is a big defense company, typically the numbers have been pretty close to what the forecast expected, with the exception of that one, which was in Q3 2021. So this is where we're expecting numbers to be today, which is actually quite a bit lower than where they've been previously. Now, anything that's involved in defence, given what's going on in the world at the minute, may be in for a bit of a surprise on the upside, maybe. Have to wait and see. But yeah, this is a very cool tool anyway. So what else have we got this week? Just to run through a few more. On Wednesday, Abbott Laboratories, Baker Hughes, NASDAQ, Procter & Gamble. Any other names standing out there, gents?
United Airlines,
Whirlpool. None of the big tech names. Alcoa is generally always the company that sort of kicks off earnings season. They're a big company involved in metals, so no doubt they'd have had a pretty good time of things of late as well. So they are often also seen as the bellwether of the earnings season, but times have changed a little bit with the way commodity prices are at the moment. So I'm not sure that still holds true. Number of companies due out on Thursday. American Airlines, Dow, Freeport-McMahon. Anything else on there we should be? I think the tech companies all tend to come sort of in a cluster, don't they? None of which I can see on there. When did you say Tesla was out, Jamie?
Well, according to TradingView, it said it was actually tomorrow, but the TradingView's earnings have been wrong before, I've seen, so it might be. Let me have a little look, see if I can find it quick.
Okay, well, we'll try and keep across that if we can anyway. So next up, we will be talking about the Gun to the Head challenge. This is where the three of us pick new ideas for the day ahead and obviously review previous trade ideas that we've done as well. These are all on our TradingView profile. So if anybody wants to see what we've done previously, they can check those out using the play function to see how they've played out. Each of the ideas that we publish must have a stop and a target, typically with a 2-to-1 or better risk reward ratio. All the ideas that we do are placed at market. So we'll talk about an idea now and we'll publish it straight away to our TradingView account. These trade ideas will expire at 9 p.m. UK time or when the stop or the target is hit. And we'll maintain a performance spreadsheet of these ideas as well. So, I mean, I can show quickly the spreadsheet. It's just a standard spreadsheet, but on here, on Thursday, we had two winners on New Zealand dollar versus the US dollar and also on the Spain 35 index. Steve was sadly stopped out on his Bitcoin long trade, but all in all, we had a pretty good day. And on TradingView, as we know, we can watch these ideas play out. There's our stream. Let's just go back to my profile if I can. So here's Jamie's idea. If we click on that and play it out, we can see that it was nicely on side for Jamie at the 9 p.m. cutoff when we closed those trade ideas. Steve was looking for a breakout there, which sadly didn't materialize. And
well, it did. It broke out to the downside rather than the upside. So
yeah. But you had a gun to your head, Steve, and you tried to preempt the break, and that's the risk, right? So we put a bit of description in here as to what it is we're looking for as well. And finally, we had the New Zealand dollar, US dollar trade idea, which actually went on to hit target, but not until 1 o'clock on the 18th. So on Sunday night, that would have been. But all in all, it was on side nicely come 9 o'clock UK time on Thursday. So yeah, three new ideas coming up now. Who wants to go first?
I'm ready to go. If that's all right, I'll jump in. I've been looking at the yen pairs this morning. I looked at Euro yen and that's run away. Looked at Aussie yen, that's starting to run away. But New Zealand dollar yen is just at this nice breakout level, which I tend to look for these gun to head trades. So I'm going to hope for a bit of a move higher here. We've got this ascending triangle type formation. It's broken above. Ideally, I'd like to see a 4-hour close above this level, but it isn't ideal that I have a gun to my head. So here we are. We're going to try and buy this at, I'm not sure. Let me just see what levels I've got. Price now is 86.64, so I can actually get in a little bit lower. And we're going to target 88.89 with a stop at 86.01. So this gives us a nice, let me draw that out, 3.57 risk reward. So yeah, we'll go with this and we'll look to close it by 9 p.m. tonight if it doesn't hit the profit. Stop.
Nicely done, Jamie. So you're going to publish that onto the account now.
Yeah.
And Steve, have you got one ready for us?
No, you can go first, Joe.
Oh, cheers, mate. Okay, I'm looking at Litecoin, actually. So having to flick through various markets today, but this was one that stood out for me. Looking at it first up on the daily chart, just to give it some context, it's trading lower from what I can see here, trading in a bit of a bearish channel. It's around midpoint of that channel at the minute, so it's not particularly exciting as it stands at the minute, but clearly the bias for me remains on the downside. Therefore, I feel comfortable looking for opportunities to sell that. And if I look at the hourly chart, just to try and find a reasonable looking excuse to get short. I can see it was trading in a bit of a corrective channel here. We've seen a breakdown and we've seen a rally in recent hours towards a 61.8% Fibonacci retracement of this move here from the highs on the 17th of April down to the lows on the 18th. A little bit of a stalling in here. I also like to use the 10-period moving average as a bit of a trigger for momentum. So we've seen a close below that on the hourly chart, which for me signifies that we could be about to see a renewed move to the downside. So I'm going to sell that at the current price of 111.03. I'm going quite tight with the stop. So above the highs that we posted around 5 a.m. UK time this morning, which goes in at 112.44, and I'm going to target a move back to these swing lows here at 105.33, looking for 4.35 risk reward ratio on that today. So that's my trade of the day, selling Litecoin. Nice. Steve, did that give you enough time?
It did, mate. I'm going to go with you on today. Bitcoin for me has stalled as well at a decent resistance level. We saw similar sort of move on the 13th, 14th of April. Price action stalling around about 41,500, and a little bit of a reversal candle here, shooting star candle, well, two of them, and a doji. So that looks like it may have stalled. So I'm going to fade this move now, and the stop can be, let's see what it looks like at I'm going to make it a slightly tighter stop than that, and I'm going to go for it on the downside. Let's put another, what am I doing? Well, 4-to-1 risk reward, that's a bit too much. There we go. We go back down to the lows. That's the trade idea I'm looking at, based on the stalling at resistance and that 4-hour negative candles that are forming. So I'm going to publish that as soon as I can. But yeah, selling Bitcoin here. 3-to-1 risk reward, targeting a move down to 38,500. Stop at 41,500.
Stuff. Good luck.
Nice.
112.44. So just publishing this up. Okay. Data-wise today, so we've got US housing starts at 1:30 UK time today, and then throughout the week we've got Canadian consumer prices, which are due out tomorrow. We've got the Bank of England Governor Andrew Bailey speaking on the 21st, which is Thursday, and we've also got the Fed Chair Jerome Powell speaking as well. So it could be quite an important day on Thursday, and could be some volatility to expect later in the week. And we've also got European flash PMI reports to end the week as well. We've had a question through on the chat via YouTube from Athar, and he's asking about our signals which are available on IG Markets. If you go to the IG Markets page, if you're a customer, go to the signals section under PIA First, which is Signal Center before we rebranded a good few years ago now, it feels like, but they remain as PIA First on IG. And they are offering a fair selection of the signals that we provide on a daily basis from our team of analysts who are situated around the world. And according to Athar, some of the signals are often delayed, which we hope to get them out in as real time as we possibly can. All trades typically have an expiry, so do keep an eye out for the expiry times that are associated with each trade idea. The ideas that we publish in the morning around the European Open, they will close at 9 p.m. UK time each day. So that's when we close them off for profit and loss purposes, in the same way we do with the Gun to the Head challenge. Some of the signals will run throughout the evening into the next trading day, and they are typically markets that are associated with the Asia Pacific region, so currencies linked to that region and also indices. But it should all be on the trading signal when those ideas expire. It's totally up to you as to what you do with those signals. You can run them until completion, or if you want to mirror the performance that we have, then you may want to close those off at the same time that we do, regardless of the outcome. Hopefully that clears that up. Gentlemen, do you have anything further to add before we wrap this up for the day?
No, nothing further, mate.
All good from me.
Cool. Okay, guys, we'll have a fantastic day, and we'll be back tomorrow morning.
Cheers.
Goodbye.
Bye.